Hello, 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 everyone. Happy New Year. Welcome 2024. Let's see what this year brings. How is everyone doing? Good morning, Patrick. Good morning, Sterling. Sterling in with the Tesla delivery numbers, which just came out, slightly beating consensus. So there we go, looking like it's going to be up a bit this morning after a couple-day pullback at the end of last year. What else we got going on? Hey, Christoph, Happy New Year. Good morning. Happy New Year Options 22. Where is everybody else? Lower turnout this morning, but we got to keep going. We got to keep going with the market analysis. Hey, Pevneet, Happy New Year. So we got coming up. Oh, now we're getting people coming in. Good morning, Tony. Happy New Year. All right. Well, we'll keep waiting for people to flow in. Not much coming out today. We got S&P Global Manufacturing 15 minutes after the cash open. Construction spending 15 minutes after that. And then a 3 and 6 month bill option. Thank you for the likes. That's where we sit. The rest of the week. Tomorrow we got JOLTS, ISM Manufacturing and JOLTS. And then we have the FOMC minutes, the December meeting minutes. So we'll see about that tomorrow being Wednesday. And then Thursday, we have the delayed EIA numbers because of New Year's Day on Monday. We have the S&P Global Composite and Services numbers, and we have unemployment numbers on Thursday and Friday. We've got non-farm payroll Friday, and the ISM services number. So Friday's a big day this week in terms of sort of news, followed by Thursday's not bad. Wednesday's a big thing is going to be the FOMC minutes. This morning, we had an Apple downgrade. I think it was by Barclays, wasn't it? I don't remember exactly, but got some continued pullback in mega caps besides your Tesla after the slight beat in delivery numbers. You got oil bouncing, or it might be a percent B buy. Little buy bounce today on oil. So we'll check in on that. But looking like the market is continuing on Friday's price action, which started its pullback on Friday. Cocoa, it's guaranteed. Be careful with guaranteed. Is it going to close above there or tap there, Coco? Good morning, Royal Palms. Happy New Year. Careful with guarantees there. There are very few things in life that are guaranteed. So, groups so far, let me just do a quick refresh. Energy leading, everything else lagging besides energy. Technology leading the way down, 133 basis points so far. In terms of the Fed watch, we still have 1, 2, 3, 4, 5, 6 instead of 7. Only 6 rate cuts priced in. With the first one starting in March. Remember the Fed meeting at the last day of January. Last day of January this month is the Fed meeting, which is priced to be a pause. Fear and greed, still even with Friday's pullback, we're still in extreme greed, barely hanging on to there. So that's where we sit. If this pullback continues with the close, we'll probably drop into greed mode today. Where are we in the Shiller P to E ratio? Where are we right now? 32.27. Nosebleed territory up there. Still in nosebleed. So either earnings have to play a really strong catch-up or market will need to pull back to get those earnings multiples down. So either earnings have to expand or the multiples will really need to come down. Friday, again, started the pullback, little bounce into the close, and then following through with the European Open, started the major selling pressure. What am I keeping an eye on? So, first and foremost, we're into the rotation zone. We still have a potential double top in play. Fairway off still from triggering, but it would need the daily close below 47.43.25. On the higher time frame basis, the weekly basis, you can see here that could potentially return us to the weekly rotation zone after 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks straight up. 10 weeks straight up. So, still, cycles are starting to roll over. And could be dropping out overbought, but we're going to have to see some follow through to the downside. Okay, today I am looking at we just moved slightly below the 62.5, but I'm watching to see where we close today. 47.80 is the key closing level. On continued bouncing into the open, 47.92 roughly. And then we're looking at about 4,800 to 4,804 is the major resistance area. With this, I'm going to watch at any point after we're done with the pullback how strong the secondary bounce is. That will tell us a lot going into the beginning of the new year. But in the short term, is at 47.80 in the S&P level. That is critical. Okay. What else? But why? Because if we close below that, I will be watching for a retest of the lows from Wednesday, December 20th. That would be between the 87.5 and the 100%. And then if we close below those lows, it triggers the double. Still slightly lower probability double because still technically against the rotation zone. Good morning, Legion Reaver. Where do you see the ES heading this year? I still have it lower. So last 22 and 23 were roughly offset. We're a wash. So I still have it lower. For if you're asking a full year. In the short term, going to watch for the pullbacks, and that will tell us a lot. Now, before we could get overly bearish, I need to at least see a close below, at this point, 43.88, which would take us below the 200 and the 62.5. So anything other than that would still, looking that sort of 50 is exponentially, and that would roughly see anywhere, even if we pulled back to this 44.76, 4,500 area, would only be a 50% retrace of this monster rally. So short term, I'm watching, I'm leaning bearish, but in the very short term, if the double triggers, then I'll be a slightly more bearish, and then watching to see what the secondary reaction will be. Intermediate term is more neutral. We'll see after we get the pullback, it could shift to neutral to bullish, and then longer term, we could see another potential rollover play. We've also, remember, I think I mentioned this last Thursday or what, we have a lot of DeMark combo and sequential countdowns. So those are significant topping patterns. They really need a little further pullback to be triggered, but they are in place. So again, in the short term, we have a lot of stuff that could tip it to the negative in the short term. But so far, it's just a standard pullback. There's nothing at this point, especially after 10 weeks up. This is very minor. Good morning, Heinrich. Good morning, Anissa. NASDAQ, we do not have a potential double. I don't know if anybody spotted this. This is what I was looking at on Friday. We had this little, it was a little aggressive sell-off. We had the head and shoulders right there. It's still on the chart from there. Going through all the targets, a little bounce, and then we have the European session open. Now, we did, on the short-term basis, close below 62.5, almost the 87.5. Still today, watching 16,911 on the NASDAQ closing basis. 16,911 will be key. On the longer-term basis, we're still, after the multi 10 weeks up, not even a blip on the radar. The rotation zone is 16.5. So even an ordinary pullback to the weekly rotation zone the top of the weekly rotation zone, which is still above the prior major breakout level, that's just ordinary pullback at this point. So that's why short term could still be, again, bearish, and then we'll see for intermediate term. The levels for intraday, I'm just really using these harmonics, 16,860, 16,911. Remember, that's on the closing basis, and above there, 16,962 to about 16,970. Down below, 16,809, and there's some major support in here between 16,809 and the 16,759 area. So if we did dip down there, I'd watch for potential shorter term divergence setup or a double bottom if we roll over into the open, especially if we tag that 16,809. That's what I will be watching for. Dow, we still technically also have the double in place in the Dow. Dow holding up the best. Pre-cash open, we'd still need the close below 37,390. Dow weekly, if that were to trigger with that double, would just take us back to the top of the weekly rotation zone. So keep that in mind. That's why, again, short term we could trigger some bearish patterns, but after they fulfilled, we could get another significant bounce in intermediate term. Today, on a closing basis, 37,631. Intraday major support area between 37,712 and that 37,631. Other than that, sound like a broken record. Using the harmonics, any bounce 37,872 to 37,9. Russell, remember there's no double in place here. Key level is 2032.7 on a closing basis. Below that, 2019.8, 2007. Above for the major, you have the breakdown level, the rotation zone, and the 50% prior harmonic. About 2044, 2045 is very key resistance. Do you see a front run? Do I see a front run for a potential double? I'd really watch to see if we bounce into the open or bounce and see what that bounce brings us. Anything I'm going to be watching if we do bounce into this 1 hour rotation zone, especially if we retest the breakdown area, and then I'll watch for another rollover play. That could be any front run pattern. VIX, slightly elevated. The key thing I'm watching for this to really continue is above 1430. I'll be watching going into the open about 1370. If we pull back and start dropping below 1370, I got to continue to watch possible bounce through today if we start pulling back below 1370. I have not been on Discord in a couple days. I'll have to take a look. I will take a look at Discord. If I don't respond to you for some reason today, I have a busy day. I'm recording the Futures Edge podcast this afternoon also. Very busy day for me. If I don't respond, just ping me again tomorrow morning. What else we have? The DAX with some wild price action. Look at the price action on the DAX so far today. Running up, running down, and a whole bunch of nowhere still. This 16.8 is the key breakdown level that I'll start watching. Other than that, it ran up, hitting the 17,129 area for the harmonic, hitting exactly with 17,123 and then retreating. So I really don't have anything on the DAX right now. It needs to clarify its position. So far, it's just in a horizontal corrective channel. But based off today, we could be getting more of a rollover move, especially getting on the weekly to at least return to the weekly rotation zone, the 16,600 area. Notes, breaking down below the rotation zone. Here, next key support is roughly about 111.28. I'm more interested in the yield, watching the micro yield, because the key target on that is 4. 4 to 4.01 is very key. All right, that's what I'm watching. Still got some room to potentially run in daily cycle tops. Then I'll be watching for the pullback reaction to see if we're putting in a longer term bottom on the yield, which would be a longer term top on the 10-year. So that's what I'm keying off of really, is that micro yield and watching for that return potentially to the 4 handle. 10-2s. Starting to try to put in a little more steeping, but it's really got to get above minus 25 basis points before we really start the bear steepening again. So that's the key level. I'm watching that in for the next couple weeks. I'm going to be watching that minus 25 basis points. Actually, going into the whole month of January through the Fed meeting, I'll be watching that minus 25 basis points on the 10-2s. Dollar index. Dollar index falling through nicely. Watching to see how we react at 102 area if this bounce continues. On any rollover play, secondary reaction is going to be key. Any pullback on the dollar to see if we're setting up a longer term bottom. Remember, it's been pinned at the bottom. And now also, for those who went through the percent B training, the free percent B training, watch this week to see how we close above the high from last week, the 101.35. A weekly close above that is a percent B buy. So it could be setting in. That doesn't mean it has to run every week. I'll be really watching for any pullback reactions, but that's where we sit from the dollar index. Crude, watching Friday's high. 72.62. Rotation zone is flat, but a close above there could be for a continued bounce pattern. We pulled back to the 50 to 62.5 on Friday. That's the major support zone, so I'm watching to see, yet with Friday's high, to see how it goes in. We're pulling back here a bit, but that's really key to what I'm watching for on crude today. If that does not hold, or if we close below 70.89, I'll continue to watch for the pullback move there. Still not much going on with gold. Pulling back, not at daily cycle bottoms yet. It's really got to sustain above 2050 to really keep this sort of bounce trend, and the longer term trend won't be in jeopardy, but the shorter term stuff, 2050 is key. Yen, not much to talk about right there. Be interesting to see if it closes above Friday's high. Euro, we're finally getting the reversal, breaking down below key support in the euro. So pay attention to this, especially if we bounce, where we close in relation to this 110 level. Remember, the euro, even on this little ass pullback, is now at weekly cycle tops. We have divergence here, and we've got waning momentum. So now, and we fail to get to the 87.5. So I'm keeping a very close eye for a continued pullback. We may get a secondary bounce, but that 110 is key. Pound, which hasn't had any great things, is breaking down from this sort of rising triangle pattern, but really has got to get below 126 before I watch for a continued follow through on a breakdown. Take a look at Carvana. I hate this stock, but it appears to have confirmed inverse head and shoulders on the monthly with a percent B buy signal last month's close. Yeah, I hate the stock too because of the potential major fraud impact. That's the only thing. So on anything, it would be if you're trying to play this to alongside, it would be a very tight stop for me. I don't touch this stock because of the fraud aspect of it, the accounting aspect. It's got a lot of problems from that standpoint, so I personally can't touch a stock like that. Tesla, slight gap up from Friday's close. Still 250. It did close above 257 on Wednesday. Did not get any follow through. So 257 again is going to be key resistance. If it reverses, 245 is key support. Other than that, nothing. Earnings are going to be more important for Tesla because, yeah, they beat deliveries, but lots of price slashing. So earnings are going to be very important, which looks like Wednesday, January 24th for that. We'll get to the spiders and the Qs in 1 second. Apple, we had a downgrade coming into, we're trading just below that 50. If we start really breaking and closing below 189 pre-market, we're below that, but I'm going to be watching that on a closing basis. Then I'm going to be watching for the potential breakdown play, a little more substantial in Apple, potentially back to 182. Let's get to the spiders and the Qs. Spiders still has a potential double top. Spiders, the key levels to watch, 471.47 on a closing basis. On intraday, any bounce will be 473.60 to 473.90 is first level resistance. And then I would use 474.50 and then 475.12 are your key levels even before the gap fill. What else do we have? Major support coming in at 472, and then the 471.47. A breakdown below that's 470.25. The Qs also keep an eye on the closing basis, 406.66. If we start moving above that on the open, I'm really focusing at 407.70 to 407.91, and then 408.71 are my levels to the upside. 405.41 and 404.15 to the downside. Hey, Connor, what's this? Very fascinating how final double target on ES from December 23rd high to October 20. Efficient market theory holds. Wonder what the price are starting to price in. Oh, the huge double top potential, which could never trigger. You're talking about this. Oh, wait, this thing. The month, I mean, I'm watching it down here. We'll see. We will see if that ever triggers. Now, remember, that it may never, ever, ever, ever trigger. And you might be wondering why I have the targets down there, because they're still valid on the weekly, and this is still a valid double. It's just easier to see on the daily. So that'll be interesting. Adobe has triggered. Adobe has, yes. Oh, Adobe. It does have a triggered double top after earnings has struggled. I'm still watching for the rollover play in Adobe. The key stop level that would invalidate the double is still 617.87. So long way off, but this we could easily see back to. I'd really be focused initially on the 563.10 target, just based off of prior price action. And you see that could just take it even to the bottom of the weekly rotation zone. It also closed on a weekly basis in the rotation zones, getting that little bounce. So we'll have to see with Adobe follow through. Is there a triggered monthly double bottom in GEN? GEN? Gen Digital. Don't trade that as a double. No, you already had your double back here. Then it just retested that area. Do not trade it as a double. Even on here, because of this, it's too messed up. Don't trade it as a double. You can watch for pullback plays on it because it's still holding the rotation zone. The key level I just watch for is, the weekly rotation zone, and as long as it holds up above about 2086 to 21. On the short term, if you get any aggressive buy patterns back at 22, could be some follow through. But I'd be looking, especially if this something like this. This is where a percent B buy Could be another on a pullback. As long as it holds this key breakout level, pulls back, you get a weekly percent beat buy, could be worth it. So you had your double here, then you had a weekly percent beat buy here, and then it went on the tear. Massively overbought. So I'd be looking about more for that weekly pullback here. That's personally how I'd look at it. Remember, especially for stocks, if we get some decent pullbacks starting in the short term, we could get some, percent beat buy setups, and then the follow through on that will tell us a lot with markets, as long as they hold key support. That's something I'd be watching for. Remember, we are insanely overbought. Thank you, Legion Reaver. All right, going into the open. Let's just see. Yeah, that's really sloppy. Nothing major. Again, nothing's changed with the levels. 47.92 on any rally. We're opening right now. Keep going into the open. Watch for 47.78 on the S&P. And I shall talk to everyone later. Bye for now.